Aloha YouTube investors. How is everybody doing today? My name is David Jansen. Welcome to my channel. Today is October 22nd. It is Thursday and we are talking earnings this week and through the rest of this month and probably for a few weeks throughout the rest of the year. But seeing how it is earnings season, what I talked about in my previous videos is this week and next week through the month of October. And I know there's a couple companies that I own for November as well too. We'll be going over their quarterly earnings. So previous videos were JP Morgan, Bank of America, and what was the other one? Johnson & Johnson. And then yesterday was Tesla and Verizon. And Monday was Procter & Gamble. So today, out of my Fidelity portfolio, we have Intel, and we also have Coca-Cola. So, and then I have two other holdings that I want to talk about as well too. So this picture here is of Bob Swan, who is the CEO of Intel, and I have this chart here that I found on the website Alpha Street, and it is showing Intel's quarter 3 earnings. So we'll zoom in right there so that you can see it a little better. And it wasn't a great quarter for Intel, and if you saw my video from the previous quarter, from quarter 2, their stock dipped then, and their stock dipped on this one as well too. This one, I think it fell right around the same as it did at the end of quarter 2, right around that $48 mark. So I might be adding to this tomorrow or next week just to kind of feel it out. Just because my average cost per share is like 48 bucks, and right now at the end of the US closing day it was at 53, I believe, but then in after hours the stock actually dropped down to like 48 again, 47, 48. So so it's kind of tough for me here in Hawaii because the US stock market opens at 3:30 in the morning, and I can do a limit order, but I pretty much buy everything on fractional shares nowadays, and Fidelity does allow for that, but there's other holdings that I am looking into. So there's AbbVie that I've been dollar cost averaging into. AT&T rose today because of their earnings report. I own AT&T, so I'll be having a video on them as well too, as well as People's United Financial. But let's go ahead and look at this summary right here. As you can see, their numbers already. Revenue down 4% to $18.3 billion, and their business unit revenue changes. Here you can see their client computing, which is basically chips and stuff like that. 1%. Data center down 6%, which is very surprising because you would think with more people working from home and more people buying computers and needing to have storage that the data center would at least be flat. You know, you wouldn't expect it to drop 6%, maybe 1%, but I wouldn't expect it to drop at all. So Internet of Things minus 26, they're still building that out, so that doesn't really surprise me too much. Programmable solutions down, non-volatile memory solutions down as well too, and then Mobileye up 2%, which I actually really like. Mobileye, NIO, the EV car company out in China, they are using Mobileye from Intel as their for their autonomous driving vehicles, so, and for their AI and stuff like that. So that is really good news because NIO is growing, and I own a little bit of NIO. I'm up about 500% with them in my Robinhood portfolio, and I'm probably going to add more to them. They dropped down today to like $27, and they already peaked up to $28. So before they keep growing, which I think it was JP Morgan that said NIO will then be trading at about 40 bucks, or at least that's their price target. Before they get there, I'd like to add some more. So, but you know, finances are kind of tight to say the least. So, so we'll see what I'll be able to put into it. So, as far as their quarter 4 outlook, projection is for quarter 4 2020 is 17.4 billion. Last year they brought in 20.2, so that would be down significantly even if they meet that. And then their revenues outlook for 2020 is 75 billion as well. And then the GAAP and non-GAAP earnings per share, I don't do a whole lot with that. As a dividend investor, and Intel being, in my opinion, more of a dividend stock than a growth stock, because they haven't really outperformed or broke out in a long time, so especially this year. So operating income down 22%, 5.1 billion, but then the dividends paid year to date is 4.2 billion. I do believe, because as you can see here, their operating cash flow year to date is over 25 billion, that they'll be increasing their dividend payment. So that's really kind of why I hold them. If for whatever reason they aren't able to do that dividend payment anymore, then I'll more than likely get out of the stock. So like I had to do with a couple others recently here. With the exception of Disney, I don't see any reason to get out of Disney. So here on CNBC website, it says Intel shares fell as much as 10% in extended trading, like I said, and after hours it dropped down quite a bit. And as far as earnings are concerned, $1.11 per share, which is adjusted, versus $1.11 per share as expected by the analysts. So adjusted, sometimes adjusted I don't really pay attention to, just because sometimes I look at their adjustments and I'm like, okay, it's exactly the same as the previous one, so what were you adjusting? So, but then as far as revenue, you can see that analysts from Refinitiv, I can never say that right, was expecting 18.25, and they brought in 18.33 billion. So decline, yes, they did beat estimates, and some of these people, they put these estimates based on the current situation. Intel's largest business, client computing, as you can see right here, that sells their PC chips, and I talked about this in their last quarterly report, produced 9.85 billion in revenue, so that was up 1%, like we talked about a little bit earlier. So I just kind of thought, personally, my opinion, that with the stay-at-home economy and people buying more computers and companies having to buy more computers for people working out of their house instead of having to travel into the office, and having to store all the cloud and storage and stuff like that, that their numbers would have been a little bit better. So, but some other people that I saw in the news and some other articles that I read, they're not so bullish on Intel. They really don't like the direction that they're headed in right now. They're still the leader in chips. They're still the leader in computer hardware and stuff like that. And they do pay a solid dividend. As you can see here, I'm showing you the dividend view in my Fidelity account. So the yield is 2.45%. So that's kind of what I'm holding on to it for. I own 3 shares. I really would like to, originally I'd wanted to get this up to 10 shares. So, but now I might just settle for 5. I know. Some people are like, ooh, 1,000 shares, 500 shares. I'm like, ooh, maybe I can get to 5. So, but I'm still an early investor. I'm still only 15, 16 months into this. So as long as you make your purchase before November 5th of this year, the day after the U.S. election, then you'll get paid for the number of shares that you purchase before that day on December 1st. So, and the amount per share is $1.33. $1.33 is 33 cents. So for myself personally, it'll just barely be $1 or so that I'll be getting. So that is Intel. I'm going to have some other videos for you very shortly here. Stay tuned to the channel, and for later on this week and next week, the same thing. I'll have earnings reports for you as well. So hope you have a great evening or a great day whenever it is that you're watching this. Mahalo and aloha.